Hi, Andrew Bell with you. Hey, I look forward to seeing so many of our clients and Gold Coasters at large at tomorrow's Ray White Bell Group Business Meets Sports Lunch, where we will feature a fireside chat with former Prime Minister John Howard. With all that's happening in the world at present, it'll be fascinating to hear his insights. It's a great honour to have him join us. He follows a number of outstanding interviewees we've hosted in recent years, including Harry Triguboff and Bruce Matheson and Clive Palmer. And also ensures that there's plenty of new rescue equipment on our beaches, given the huge number of rescues performed every year to keep the 4+ million visitors to the Gold Coast safe during their holidays. You might recall that a couple of weeks ago, I mentioned that the fundamentals of our real estate market were in pretty good shape. That included the fact that we had seen one interest rate rise, and we knew there was a probability of a couple more coming along. However, I did say that the real risks to our market were not from within Australia, but from overseas events. Now, I didn't have any prior notice of the Iran war, of course, but it's exactly the sort of situation that can come out of left field and have a significant impact on markets. Our latest research shows that national house prices are now 14% higher than a year ago, representing the strongest annual growth since June 22. However, there are signs that this growth is now easing, particularly in Sydney and Melbourne. We're also seeing the national rental growth has moderated to 4.8% for houses and 4.2% for units. The Gold Coast now leads capital city house rentals at $950 per week, ahead of Sydney at $810. Who would have thought 5 years ago that this was possible? However, I'm sure the great majority of people have been increasingly aware that if property values were growing at a minimum of 10% per annum for 5 years, it simply couldn't continue forever. In fact, there were several years that during that period of time where price growth was substantially higher than the 10%. All of that growth came from supply and demand equation. We had strong population growth of over 500,000 people per year, combined with negligible housing construction, which of course created enormous pressure and competition for property, pushing prices higher. Now, population growth has been wound back significantly, so we're not seeing the same level of demand as before. At the same time, there's been very little improvement in housing construction numbers, despite all the noise coming out of Canberra. There's plenty of noise about what could be built, but the reality is that building costs have made construction a much bigger risk, particularly in the very price-sensitive affordable housing segment. So while demand is starting to ease, supply is not improving. The wild card to watch now is oil. At present, stockpiles are helping maintain supply, but the concern is around damaged refinery infrastructure and the risk to shipping passing through key straits that supply oil, particularly to the Asian region. If those supply routes are disrupted for any length, the cost of oil will rise well and truly beyond what we see now. The impact on just about every aspect of our life will be significant. Higher oil prices feed into inflation, which then forces central banks around the world to raise interest rates. We've already seen a knee-jerk reaction in oil prices, but there's still a lot to play out before we know how it ultimately unfolds. The bottom line is that the status quo we've experienced over the past few years in the property market is likely to be behind us. With all this disruption, there's no surprise we're seeing quite a number of people listing their properties for sale and wanting to get that sale through the system as quickly as they could. As I've said for some time, there are two key factors supporting the Gold Coast property market. First, everyone needs a roof over their head, and demand still outpaces supply, which places a strong foundation under our market. Second, the Gold Coast is now one of the strongest markets in the country, and therefore among the least likely to suffer a major hit if global events do begin to impact heavily on our economy. Now, my closing thought for this week: thank heavens Australia is so far from Europe and the Middle East. Whilst we all see shortcomings here in Australia, I continue to ask the critics, where else in the world would you want to be? Where else is it better? Where else is it safer? And where offers a better lifestyle? I trust and hope that's what's happening around the world at present has minimal impact on us, but none of us should be making plans based on the real estate market rising at 10% plus every year from now on. It simply can't continue at that pace indefinitely. That said, property remains one of the safest places to have your money invested, whether it's your home or your investment property. Let's hope that between now and my next fortnightly report, things start to settle down. Hope to see you tomorrow at the lunch. Until then, warm regards.